We're joined this week by Dr. Cody Dahl, the Vice President of Acquisitions and Strategy. Nice title. How are you?
I'm doing well, sir. How are you?
Hey, good, thanks. Hey, talk about the company a little bit. What do you all do?
Sure. AgIS Capital. We are an investment management firm that we invest in permanent cropland for institutional investors. So think, think public pension plans, teachers, pension plans of pick a state, and we get allocations from them. Separate accounts is typically what we do, and they would give us $100 million, let's say, give or take, and we go out and invest that in a portfolio of permanent cropland, just like they would allocate money to kind of a stock and bond manager. And so we buy the land kind of based off of our investment theses that we have at the time, and we manage the farmland. And then at harvest, we harvest and then cut them a check, hopefully return them back some cash. And so they've got kind of an asset class that we can provide access to.
All right, so you grew up in Central Illinois. How'd you get
Yes.
from there to here?
I mean, it seems like a lifetime ago. I went to the University of Illinois for my undergraduate. I loved it. Corn and soybeans were about the mainstream of Central Illinois, main topics of discussion, and I kind of wanted to get out into more markets and learn a little bit more about other pricing dynamics and whatnot. So it was either California or Florida, and Florida had this Masters of Agribusiness program, and I chose Florida because they gave me some money to go to school. And
That's always good.
yeah, I wound up switching into the PhD track after my first semester and graduated there. And I was going to go teach, but while I was,
And your dad was a professor, right?
yeah, my dad was a professor at the University of Illinois in the College of Agriculture. He was in communications. So yeah, he made at one point in time I wasn't even going to go to school, and he basically said, "Well, then you're on your own." And he cut me off or threatened to, and said, "Or you can go to this junior college in Kewanee, Illinois, on a horse judging scholarship." And I wound up thinking that through and wound up going to junior college because he basically made me, but best move I ever did.
But I mean, there was a reason for it back then too. I mean, you're a horse guy. You love horses, right?
Yeah, I actually had the opportunity to work for some world-class horse trainers in Central Illinois and in Missouri, who now are kind of at the premier stage of the American Quarter Horse Western Pleasure circuits. Cole Baker and Mike Tivley, two horse trainers that I worked for growing up, and that's what I wanted to be. I was making $500 a week, get my gas paid for, and what else could you ask for when you're 18?
Exactly.
Yeah. Thankfully, Dad showed up after I told him I wasn't going to go to school. He drove 8 hours down to Missouri and said, "Well, I'm going to need those keys back for that truck that I bought you, or you can go to school." That's the short story what happened, and I wound up going.
That choice became a little more easy, a little easier for you, didn't it? A little more black and white.
Yes, sir.
All right. So one of the things I really wanted to get into with you is what you watch, kind of on a broader sense, and a couple of trends that we've heard a lot of. No matter what you do for a living these days, since COVID hit us, folks have heard about supply chain, right? That is, now people who are in the thick of it have been dealing this their whole careers, but for most people, they just knew that they went to the grocery store and stuff that they used to rely on was not there, or maybe they needed something for the car, they needed something for the office, for the house, for church, whatever the heck it was just was no longer available when so much stuff was shut down. And so from a broader view, maybe just thinking more specifically in the ag sector, how are we? Are there permanent changes to supply chains? I mean, where are we?
That's a good question. I mean, I think that there are definitely some ripple effects. The adoption of online, your local grocery store delivery that's, been adopted, and that has implications, I think, for fresh fruits. If the person that's picking your stuff doesn't necessarily get the best product, you may not be a repeat consumer there. But I think um, I think some of the main challenges are temporary in terms of the commodity markets. So in my space with permanent crops, you're thinking about um, walnuts, almonds, pistachios, to lesser, it's less commoditized, but you still have apples and cherries and pears. Um, so I think those avenues have kind of adapted, but we still have got these hiccups. You had COVID in 2020, and then and prior to that, by the way, we had the tariffs that came in, the countervailing duties. So that kind of, you know, how do we not circumvent, but you had some trade flow diversions that occurred because of those. And so no, the supply chains are no longer optimally traded because of those tariffs. Then you have COVID, which kind of shocked demand in some regards, positive and negative, and depending on consumer products. And then we had the kind of the Russian and Ukraine conflict, which certainly impacted input pricing for a lot of agriculture foods production. Excuse me, pesticide, or excuse me, fertilizer.
Fertilizers.
Yep. And now we've got kind of the implication with the Middle East and Israel and Gaza, and just kind of general tension, I would say, internationally between some major nation states that has impacted who they've, China in particular, impacted who they've done business with. So I think COVID itself had some definitely had some impacts in our industry. Ending stocks went up for a lot of production. 2020 happened to be a really big year for a lot of the nut space, let's say. But then you've had these reoccurring challenges, let's say, and on the backdrop of that, you've got these tariffs. So,
and I feel with the supply chain, I mean, some of it was maybe temporary with consumer shifts when most people are staying at home for a while. Remember, for a while you couldn't get ketchup packets, right? Like
yeah,
there's certain things like that, because for the restaurants, they were able to stay open, everything's to go.
yeah,
So, you needed, there are just certain things that you needed differently that were involved in delivery. We ordered a lot more stuff online, so we needed a lot of cardboard boxes and such, right? Shipping containers. And so some of it may have been an adjustment. And then of course that puts particular strains as we made that switch. So nobody's eating in restaurants. And then people started going back to restaurants. So then we had to shift back. And I know
yeah.
that's just one side, but I mean, it's just a constant adjustment. Man, your response here, you kind of tapped on so many hot button things, but I wonder how about we just drill into nuts a little bit, because they've been through, there are so many of these factors are just hammering that industry, right?
Yeah.
And as you look at that, I mean, is some of this going to be permanent? You're going to have some of these folks in California are just going to bail out on the business, right?
Well, I don't know about that. I think because to be clear, we've been kind of in a temporary downturn since 2020 in terms of returns when you look at performance. And there may be, a lot of folks that are in that age range where it's like, do I want to weather this out or put the farm up for sale? And all of this is dependent upon whether they've got kind of a next generation to take over. But as you know, in agriculture, the next generation, they're not, a lot of times they're not sticking around. So we're seeing kind of transitioning happening right now, because it's been 2020, since 2020 permanent crop returns have been less than stellar. So,
and maybe let's go ahead and dive into that a little bit, because that's kind of a flip, right? Where the trend lines have almost reversed. What's going on there?
in terms of permanent crops or relative to row crops?
Permanent.
Yeah. So for a long time, I would say we were kind of, you had this growth coming out of China, and in general, it was kind of lifting up, economic growth throughout the world. And so you had kind of demand for nuts and other commodities rising. And in California, we planted, we kind of, had this period where um, maybe the supply wasn't catching or wasn't keeping pace with demand. And then it may be not even demand, but like when the dollar drops, the relative value of the dollar falls, foreign consumers can purchase more US goods relative to what they could have, if it hadn't fallen. And so prices have to rise to kind of, ration demand. And we had a period recently from about 2000 and I think 9 to 2015 where the dollar kind of just broadly fell in value. And we were coming out of the global financial crisis, and again, economic growth was occurring, and prices just shot through the roof for, you look at almonds and uh, pistachios and walnuts, and windfall gains in many instances for those years, and farmers and investors alike kind of plowed that capital back into almonds, walnuts, and pistachios. And so, during that period, let's say 2010 to 2016, that growth is now coming into production, since 2020, depending on the commodity.
Because it takes a while.
Yeah, it takes a while to grow. You don't get permanent crops. You don't get a crop until they mature. Almonds could be maybe your first crop in the fifth year. A small light crop. Walnuts is going to be a little bit later. Pistachios could be the eighth year. So you make these planting decisions in kind of under one set of circumstances, and then it's like a regime change in another.
Mhm.
And regime changes, now you have higher tariffs in China, you have a stronger dollar, considerably stronger dollar, and you have these supply chain kinks that you were just talking about, where maybe the ports are on strike, or the containers that are being brought in are shipping back to China empty
Hmm.
because they're paying people to do that, and so just a whole other different set of circumstances. So you have more supply that's harder to get to market, that is more costly to foreign consumers. And by the way, we export 60% plus of all these nuts. Um, so the value of the dollar matters.
And we can't absorb that.
Not domestically. I mean, we would stockpile. I wish we could. I wish everybody was out there eating more almonds and pistachios. I know I've got a couple bags of walnuts around here that I try and snack on and do my
Doing
part.
your part.
So
So as you look ahead, some of these tariffs started in the Trump years. Biden continued some of them. Trump was talking about if he gets back in, they're going to be bigger than what they were when he was in the first time. So, in light of the fact that so much of the well-being of these folks is dependent on the export market, what could that mean for their future?
well, a lot. We have kind of normalized ties with India, and I guess we're focusing on nuts right now. So they've lowered their almond tariffs back to kind of what they were before
Hmm.
they imposed countervailing duties, and that's a large growth market for us. The higher tariffs would be, it just would kind of, again, reduce what foreign folks can pay for domestic products and keep more consumer or more commodity domestically, which would satiate the market even more, and just have a overall lower price, downward pressure on prices until you have kind of a supply response where folks are going to take, if these commodities or these plants are no longer the highest value on a couple parcels of ground, they're going to take them out of production and do something else. So as all that equilibrates, you've got a kind of an intermittent period where you don't have very good returns. And that's what we've had, since 2020. Again, going back to the regime change, we're in a different. So now you're talking about extending it going forward. And that would have, I would think that if there were countervailing duties that were impressed upon us by, major export countries, even more than what they had previously, have a major impact on our crops. Major.
I feel like listening to you and some of these things you're talking about, and and again, we're focusing a lot on nuts, but because you're looking at 5 to 8 years out in a lot of these cases. So you're making decisions looking way down the line. You have no way of projecting that Russia's going to attack Ukraine or what all these other things you're talking about, a trade war or whatever the heck. So how does a person in that realm make those kind of long-term projections?
Great question. It has been exceedingly difficult the last couple of years to kind of foresee what some of these events, even their impacts, would be. But you do have kind of immediacy in the next year, let's say. You kind of see what supply and demand are, what kind of shipments have been doing for certain countries, and then what your domestic production is. So you might have that for the first year. And in the second year, you've kind of got, an understanding of what domestic ending stocks are going to be. And you add that kind of with looking at changes in plantings for different crops, maybe make some inferences about what production will be thereafter. And then you kind of, but you do kind of want to have some implications, some understanding of what exchange rates have on prices, and an understanding that we are in a very high, strong dollar situation, that when you talk about mean reversion back to maybe a normal level, that would bring the dollar down low. If it was during 2012, I would talk about a mean reversion. And so you have kind of these ebbs and flows that you need to make sure that you're tempering your price forecasts. I would also say that in my space in particular, the Sustainable Groundwater Management Act is legislation that was passed in 2014. That also has very big implications for plantings and what.
And again, we're talking California.
Yeah, we're just talking California here, but the state has effectively come in and had in 2014. The water that we're pumping out of the ground is not sustainable. Aquifer levels are dropping. You're having concentration of nitrates. Domestic wells are going dry, and we're going to stop this. So they set a plan up where everybody kind of gets together, forms their own kind of regional group, and makes kind of a water budget, an accounting of what their water resources are, and then what their water demand is going to be. And the state has effectively said by 2040, that's the year that they want everything to be in equilibrium. So whatever you pull out of the ground is what gets recharged into the ground. And everybody was supposed to kind of submit their plans in 2020 or 2022, depending on the status of their groundwater basins, and get approval for that. There's still some hiccups going on right now with some folks in the southern counties, because while you can pick your own group and do your own accounting budget, you can't for supply and demand, you can't double count supply with your neighbor. And so there's been some arguments, some misunderstandings, and so folks have got to collectively work together to get these things done. And the alternative is, and going back to game theory, the state has said, if you don't do it, we'll do it, and we'll just turn off the spigot. So go do what you can. And there's kind of see if I can do this right. There's a glide path where if you've got kind of your aquifer levels here, and then your aquifer levels out here that the state has approved, you need to kind of show what that glide path is going to be. Okay. And we started off in 2020, 2021 with some droughts, and maybe we went, some folks went to the straws in the ground and were relying on that. So maybe you're below your glide path. And every 5 years, the state's going to go back and kind of do these pseudo audits where they're going to say, are you doing what you said you were going to do? and kind of keep holding people accountable to that. But as that happens and kind of the meat of the legislation begins to take hold, there's going to be a lot of challenges for growers in areas that don't have sufficient surface water. And, in my opinion, that's going to be one of the larger factors to kind of alleviate the current supply situation that we're in. I don't foresee, barring some kind of technological advance in irrigation, I don't foresee us having the same amount of acres 10 years from now as we do today. As a matter of fact, I think we're going to have a lot less.
And in your scenario where you're laying that out, I mean, that's what makes this so incredibly challenging, right? For the areas that have had sustained drought and they had worked in a certain level of production projections as they figured out that glide path, like you talked about, to 2040, that could be a substantial change, whether it affected maybe their surface water isn't what it once was. And you're like, uh-oh.
Now you got to readjust your water budgets because this is where your water levels need to be. Yes, absolutely. And on top of that, we had a really, really wet year last year, and we're starting off some heavy rains in Southern California this year. Had Lake Corcoran fill back up. It's one point in time was the largest lake, I think, west of the Mississippi. It is now there. And it devastated kind of the ground farmers in and around the area. So what does that do for aquifers? Now that's got a clay bottom at that lake, but still the water that was necessary to fill that up.
Mm-hmm.
How were irrigation districts, were they able to capitalize on that, bank more water, put more water into the ground to kind of replenish some aquifers? And you've got these ebbs and flows, and so everybody's trying to do their best to make sure that they can capture as much as feasible. Because you got to get prepared for these new circumstances with this new legislation.
I believe early on you mentioned the NACREF numbers, and if you look, those fourth quarter numbers are out and been out for a couple of weeks, and now you've had time to look through some of these. What are kind of the things that really jump out at you at these trends?
Well, I've got them kind of right in front of me, and the total farmland index, which you can bifurcate the index in a lot of ways. You've got annual, which is stuff that you plant every year, row crops, corn, soybeans, wheat, etc. And then you've got the permanent, where you're going to plant it, harvest it every year, but you don't plant it every year. It's permanent crops. Total farmland returns were just under 5%, with income being around 3.3 and capital being the basis. But annual crops or row crops were 10.2% return, whereas permanent crops were negative 2.88. So you've had this divergence. And I mean, you can go back to the 5-year annualized returns, and annual crops over the past 5 years, you invest $1 in there, it gets compounded at 8.79%. If you're able to reinvest everything, based on some assumptions. So over 5-year period, 8.79% is the return to annual croplands. And permanent cropland had been 1.79%. That's the 5-year annualized returns. If you go back since inception, which is back to 1991, annual crops are about 10%, and permanent crops are about 10.5%. So you got about a 50 basis points spread there. And what this kind of shows is, I mean, the last 5 years, based on some abstract, time periods that I put together here, the last 5 years have really been underperformed for permanent crops, especially relative to row crops. But you back it up to the beginning, and it's like, at one point in time that really strong returns were coming from permanent crops. They're still kind of exceeding row crops, but not in the recent future, or not in the near term. That hasn't been the case. So also, if you look at kind of these almond and pistachio indices, you'll see some large reductions in capital values. Almonds lost about 13% in capital values across the board for the index. Pistachios lost 10.4%. Even wine grapes were down 2% in capital values. Citrus 2.5%. So kind of what we've talked about with the dollar and the supply response, and more supply and the COVID hiccups with the supply chain have really been putting pressure on long-term expectations. I'm an economist, and I think
Yeah.
you see capital values falling. That's based off of income expectations or interest rates, right? So we've had rising interest rates, which have cut into farmers. If you're using debt to finance your working capital, cut into margin in that way too. So um, that's kind of those are kind of what stick out to me. And the directly operated permanent cropland posted a negative 5% total return. That's the largest negative in terms of magnitude, the largest negative return posted since inception. It's the first time pistachios have had a negative return. Their total return was 5.6. By the way, pistachios yielded 5% income. So while prices have gone down for pistachios, they still haven't. They're still above. It's still in the green. If you go back to their inception, which I think is either 2001 and 2006, I can't remember. It doesn't go back to 1991. But since inception, returns for pistachios income is 16.82%. So, there have been stellar performance there in the long term, but it's for the supply issues and stuff that we've got going on now, it's been attenuated quite a bit.
So as you look at some of those permanent numbers you highlighted, is there any reason to think that this trend won't continue the next year or two longer?
Yeah, I would definitely say, it's some factors that can make these returns revert back to kind of a long-term sustainable, higher income is going to be, the Sigma legislation again that we talked about. You're going to have, if you have a reduction in acreage, you're going to have a reduction in supply, and less supply can help support prices. Also, if you have the dollar revert lower, that will be beneficial for prices, especially with the nut crops, because we export a considerable amount of those. And if you have some normalcy in the with political interactions with some major consumer nations, that would also benefit us as well. So kind of undoing everything that's happened since 2020, let's say, would be beneficial.
I mean, as you broaden this out, and you mentioned politically, but what's happening in DC is frequently kind of a train wreck here, right? I mean, you don't look to Congress for stability, even
No.
though our country looks to Congress for stability because they need stability out of here. And you look at the farm bill, they couldn't get that done last year. And so they've temporarily extended it, but that does have so many different implications for the economy writ large. So how much does that instability play out here?
I mean, it does play out. I would say we're used to working in an unstable environment politically. The tariffs were a bit of a shock, because you kind of knew as soon as those went up that there would be countervailing duties imposed on us. But we also, in the U.S., we also have strong farm policy. And most areas do a good job of representing farmers. So if there is something egregious that happens or legislation that's going to come through that will be, largely impactful, voices are heard. I'll say that much. So maybe we don't see such extreme measures enacted. But certainly there are some issues, but given the size of the agricultural economy, there are some issues that, leave us out in the cold, and also foreign countries know that if they were to cut off exports from the U.S. ag exports, that cuts deep into rural population, and that has implications for politicians, so they can use that to their advantage in trying to negotiate. And I mean, it's very, very interesting, the dynamics and how everything plays out. But one thing I could say is that we are used to the instability. I think most farmers are. You throw in the political instability with production agriculture risk, and every year's a new year.
Of the when you're talking to current clients, prospective clients, what are people asking you about most right now?
You know, I think it's kind of what you kind of touched on. Is there going to be some sort of reversion? What's going to make returns normalized to a higher level? And also to be fair, there's been a lot of questions about why not just continue to invest in row crops versus permanent crops, because they've done so well. And, you know, largely you have to kind of look and think about how the permanent crop markets are adjusting to the current set of circumstances, the opportunity set that's available that really, to be honest, hasn't become available in quite some time. There's some properties coming up to market that we probably wouldn't see if we weren't underneath such distressed situation. So, you know, given kind of that opportunity set and the outlook and implications of Sigma, and then again, kind of benefits that would happen if we did have a mean reversion down lower in the dollar, and some continued supply chain normalcy. You know, those implications, the U.S. on farmers, it's gonna be really beneficial. I'm sorry, I got somebody coming up to the door right now. I got some dogs barking. My apologies.
Not at all. Well, hey, we appreciate the deep level discussion on this. Fun to catch up with you as you follow so many trends across our state and internationally. So really appreciate the time.
Yes, hey, Dave, anytime. It's been a pleasure.